If we believe that the stock market is an efficient way of processing all of the data and all the supply and all of the demand to set fair prices for stocks, then there is little or no value to be had in trying to outguess the market. Again, the question is, what do you know about the price that isn't available in the current marketplace? Avoid chasing past performance. It's very easy to be seduced by the media and the press. This is the top performing fund from last week or last month or last quarter or last year. And it's easy to look to that and think that's going to repeat itself. The reality is that past returns have very little indication of what's going to happen in the future. So definitely avoid chasing past performance. So let the stock market work for you. Long-term investors have benefited from returns that are in excess of inflation over the longer term. In the short term, there's volatility, we understand that, but it's all about good behavior. So behave well, keep your investments, and let the stock market work for you. So consider where the returns are coming from. That we know that a globally diversified portfolio of equity and bonds is going to deliver long-term capital growth. So understand how those returns are made up, how you need to access them, and then be patient to achieve long-term financial success and investment return. So we know that a globally diversified portfolio of equity and bonds is the right place for investors to be in the longer term. But also there is a body of academic research that says certain factors will outperform both on an equity perspective and a bond perspective. So make sure that we know what they are and make sure that our portfolios are tilted towards those over the longer term. So avoid market timing. No one knows whether it's a good time or a bad time to invest. People will have views on it, but again, evidence shows us that market timing is notoriously difficult. It's more likely you will get it wrong. So try to avoid making short-term decisions about politics and the news and remain invested in a balanced portfolio for the longer term to achieve success. So it's really important to manage your emotions when it comes to investing. Stock markets and bonds, they go up and they go down. That's what happens. It's very, very important to remove emotional decisions when it comes to investment and money, because invariably you can make bad decisions which will destroy the long-term value of your portfolio and the returns you get from it. So look beyond the headlines. Every day we are bombarded with media, with social media, with the press telling us about the latest fad investment, the doom and gloom of politics, the bad news that's facing us across the world. The reality is that long-term investors will benefit if they're investing in equity and bonds. So try to avoid short-term decisions based on what you read in the newspaper in the morning. So the final bit is about focusing on what you can control. We cannot control stock markets, we cannot control political events, we can't control the returns on our portfolio year to year. What we can control is our behaviour, our emotional reaction to news, and who we are talking to and getting advice from. So focus on what we can control, and that will lead to long-term financial success.